Folks, welcome to the Contrarian Trader. This is Bob Desmond, and welcome to our post-trade review. In these videos, what I like to do is talk about the whys of the trade. Why did we get involved with the trade? Why did we get this particular stock or ETF versus another trade? Why did we decide to short a stock rather than buying a stock? Perhaps it's the market environment that's friendlier to being short the market or versus buying a stock. We also talk about the when of the stock. When did we decide to buy? When did the stock chart say, or when did the market send us a signal that it was okay to proceed with the trade? And then the how. How did we decide to scale into a particular position? Is a stock at unsustainable levels, meaning unsustainable overbought or unsustainable oversold levels? In those situations, we want to add in increments, perhaps 20, 25% on the first round of buying, and then we'll add to that position. Perhaps on a breakout trade, a continuation move higher on momentum, we'll be a little bit more aggressive with the trade. It all depends upon the type of trade and the risk versus the reward. And you may be asking, am I only going to talk about my winners? No, unlike the well-dressed salesmen that go into CNBC and all they do is talk about their winners and how right they are about the market, I am honest. I talk about our losers as well. Why is that? It's because I like to teach people how to use the charts and stop listening to the story on CNBC. Once you learn how to use the charts, you become a very powerful trader and you're able to create wealth for yourself. Now, if you listen to the hype, you're bound to lose money. I'm sorry to say that, it's going to happen. So we talk about our losers because that's where we learn from our mistakes. If we learn from our mistakes, we know not to repeat them in the future. And being honest with yourself is very difficult, especially if you've lost money. I know the feeling. So if you learn how to learn from your mistake, you become a very powerful trader. Now, fortunately, we win on 80% of our trades. So that's a good story to tell. Most of the time, we have winners. And I hope to share with you more winners than losers, and I'm sure I will. But unfortunately, you're going to have those losers as well. So enjoy the video. If you'd like to have these videos sent to your email, please enter your email address. We hate spam too, no spam policy. And enjoy the video. If you have any questions, shoot me an email. I'll talk to you soon. Be well.
We'll kick things off with NUGT. This is the Direxion Gold Mining Leveraged ETF, which puts you 3 times long of the gold mining names. We've traded this one a couple of times. We went into the year long. We were buying shares of NUGT down here when nobody else wanted it. We sold our first position here on the 16th when Goldman came out, downgraded gold to a short, no less. So we stopped out fairly quickly, and then we began to buy back in on the 17th here, added more on the 18th, and then more on the 22nd. And then we began to scale out of our position on the 24th when we flashed this hollow candlestick, or a reversal day. You could call it that, but I like to think of hollow candlesticks either at the top of a trading range or where it found at the bottom of a trading range, indecision. And when I'm bullish on a stock and the stock is trading at the upper end of its trading range, I don't like indecision. So first out, best out. We booked some of our profits, took half positions off the table. Then a couple of days later, we had the GDP forecast come out. It was revised higher, and gold took it on the chin. Why? It's because the U.S. dollar rallied. Many gold traders were expecting a disappointment on the GDP number. Whether or not that GDP print is for real, will it be revised downward? Who knows? But the reality is this, is that traders said we have to move out, and they did so on rising down volume. And honestly, the chart, and I mentioned this to members on Morning Update, which I sent out very early on Friday morning, that beware. The charts were beginning to send some signs of concern about the strength of NUGT. One was that if you took a look at the Stochk RSI, we were trading below 50. And now we have a double top and a breakdown. So that doesn't bode well for the gold mining names. Am I bullish longer term? Yes. Will I be looking to get back involved with NUGT soon? Yes. I'll be sending out a trade alert when I do. But I think that we could bounce around this trading range here between 55 and 49 for a couple of weeks. So what this might be a good time to do is on this weakness, if you're bullish on the gold mining names, write a put, bring in some income. Or if you're long of the shares, you don't want to sell it because you're bullish longer term, sell a covered call, bring in some income. You have fat premiums on these options, so don't be afraid to do that. And writing puts, naked puts, you need to be an experienced trader, not for those who are just beginning to learn options. So please, there's my caveat. So let's dig down a little bit deeper on NUGT. This is a 2-hour chart, and let's talk about NUGT as a trade. So here's where we stopped out of our first position, which we bought down here. Again, when nobody else wanted it. We saw this trading range, and this is how we knew that it was time to begin to get long of NUGT, because on this 2-hour chart, we had broken down below the lower band of support. Then we flashed a bullish key reversal. And as we began to break out of this upper band of resistance, we opened up our first position. And we added to this trade as NUGT began to break out to new higher highs and began to put in higher lows. That is critical. And we enjoyed the rally higher all the way up to the 16th. And that's when Goldman, as I mentioned earlier, came out with their downgrade. But we didn't believe Goldman, and I'll go over Goldman's chart in a moment, but we didn't believe that Goldman had the interests of the community at large, the investment community at large, in their own interest. Goldman usually serves Goldman's own interest. And the lesson to be learned here is that when you have a brokerage house, a bank, an investment bank like Goldman Sachs come out and issue a downgrade, and they even went a step further. They said short gold. You always have to ask yourself, why are they giving me free advice? Why am I so lucky? I don't have an account with Goldman Sachs. Why am I so lucky to get advice from the most prestigious banking house on Wall Street? You're not lucky. In all probability, and in my own opinion, you're being used as a pawn. So be very, very skeptical of the free advice being offered by Goldman Sachs. Were I at the head of Goldman Sachs and I wanted to play the shenanigans that I could play using the news media, I would have been short gold on that downgrade. And I would have booked my profits down here and began to buy up shares because I believe that longer term gold is going higher. And they probably used this quote unquote situation that they helped create to their own advantage. In my own opinion, I have no evidence. But you watch these guys over as long as I've been trading, it's the same thing over again. Rinse, wash, repeat. But people keep falling for it. So here's our gap down. We had profits. We booked those profits. We moved to the sidelines. NUGT was very, very volatile, is very, very volatile. When would we get back involved? And so we went into watch mode, watch and stalk mode. And we saw this series of consolidation bars, and then we began to break out. That was a signal by the market that it was time to get long once again. And that's what we did. So we opened up a new position here on this consolidation, this bullish key reversal on the 17th, added more on the breakout on the 18th, because what if we were wrong and we broke down? Well, we stop out, we take a small loss. So we didn't go jumping in with both feet here. We only opened up a position, speculative position. Our speculation paid off. We rallied through resistance on the 18th. Then on the 22nd, we pulled back. We retested this breakout point. It held. We added more at 51.98. And then the rest is history. The shares of NUGT took off, made a new high, went well past Goldman's suggestions of where you should short the name. And has since, of course, pulled back. Why did we want to get out? Because we were in a triangle formation. We were beginning to break down to new daily lows on Friday. We have on this 2-hour chart a triangle formation. We broke down below the lower band of that triangle formation. So in hindsight, am I glad that we stopped out of the trade in advance of this breakdown below this lower band of support? Yes. Do I think that it's probably going to go lower? Yes. I believe that we're going to come back down and retest the high 40s. And we'll be looking to get back involved again on NUGT. So members, stay tuned for a trade alert of when we decide to get long. And you may be asking, Bob, Goldman issued a short sale alert here at much lower prices. Do you believe that with Goldman suggesting a short, even when share prices were lower, should you short now? No way. No way. And the reason why I say that is that while, yes, I believe that we're going lower, you have too much risk that you're willing to accept and not enough reward. And when you take a look at the weekly chart, we're breaking out on a weekly chart. Yes, we found resistance at the 50-period moving average, but take a look, folks. This is the 60,000-foot view. This is what investors are looking at, not the daily chart, not the 2-hour chart. They're looking for the macro view. This is the Warren Buffett view, the long-term view. And on the long-term view, we broke out the week of February the 8th. We held support the week of February the 16th. The week of February the 22nd, guess what? Third consecutive week above the breakout point. So while, yes, some sellers moved in, took NUGT down, I think that we are going to proceed higher in the next several weeks. So NUGT is still long-term bullish on.